Good morning, day traders, and welcome to Market Minute, a hedge fund trader's technical analysis of the stock market for March 14th, 2022. Let's get after it. So SPY, right? Fairly disappointing or challenging day there on Friday, where it gives us that high conviction candle, but low conviction volume. Yeah, we got that increasing, technically, right? Volume, it's slightly increasing, right? Slightly stronger than Thursday's price action, but this is not exactly a sign of strength. For me, this looks a little bit like a trap candle going into Wednesday's FOMC. We're still waiting for this market to figure out if it wants to give us 5 rate hikes, if it wants to give us 7 rate hikes, if it wants to hike 50 basis points, if it wants to hike 25 basis points. So that lack of clarity, right, is going to keep things relatively stuck and relatively choppy until that narrative steps up. My bias here is to the downside though, right, particularly under this 419 area. And if it can start to break down under, then we start to move towards that 416, right, 415, and then that 410 zone. QQQ, right, very similar topic or very similar story here this AM, but slightly disappointing, more disappointing volume where it's not even that increasing on volume, right? Today we want to see a breakdown under this 321 for a move towards that 320, 318, right, and then eventually a 315 mark. But this is definitely not as easy to trade to the downside as something like the SPY. Apple's gapping down here this morning on reports that China is locking down this city that supplies Apple's chips. So Foxconn, one of Apple's largest manufacturers, right, or chip suppliers, they're having a COVID outbreak in its main manufacturing city, and that's causing the factory to stop production. So that's why Apple's gapping down here this AM. Maybe that bearish news narrative can continue to push things down under this 151.80 towards that 150, 148.50 mark. I think it's still a little bit challenging here to be bearish, but definitely a pretty significant gap down. We might be able to play reversals here back towards, say, that 155 mark if that high volume reversal volume steps in. Tesla, right? Maybe the best looking bearish setup here this morning, right? Closest to outlier volume, although not super strong, but nice full body bearish candle. Pair that up with a gap down here this morning. At least you're getting a little bit of strength here to the downside. Would like to see this thing now break down under the 780, and it's going to move about $10 at a time. Now, we don't really have any formal resistance here at this 770 mark, but we need to kind of respect the resistance that we're seeing sort of end of September, right, 2021. Our next formal area of resistance, right, appears to be the 760, but I'm just going to assume it moves $10 at a time towards that 750 mark. Microsoft, right, very similar story here to that QQQ, where it's okay, full body bearish candle, but not exactly that increasing outlier volume. No coincidence, right, that doji on March 8th, right, is that same kind of similar price action we got on that QQQ, right? So very similar narratives there, and we're getting very similar price action. That being said, though, right, still have a relatively bearish bias. Keep projecting out this trend line. So if we can lose that 278.20 mark on some volume, then this thing can start to go pretty quickly down towards that 270 mark. So that's what I plan on dominating today's action. If you like this video, please like and subscribe. If you want to follow my day trades live, you can start now at dtrtrading.com. Otherwise, I'll see you all tomorrow for the next Market Minute.